Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. Stock market's back open. What's going on? Dow's up about 100. NASDAQ's up about 50. We were up more. We're starting to come back in a little bit. All right. So what am I looking for in the market right now? Well, we reached about 4,075 on the S&P, right? Okay, we had the rally up, we gapped up. The last 2 days have been both gap up days. Well, this rally's going to come to an end, right? Now, can we get to 4,100? I think we can. We can probably get to 4,100 on the S&P, but then I think we're going to start that downward drift, and it might not be a drift. It might be downward free fall. Over the next 3 to 4 weeks, I think we're going to head a lot lower. Now, I do think that the February high is going to hold. So that February high was around 4170 on the S&P, and we'll get up probably to 4100. But I do think we're going to come back down, and we're going to take out the October lows. The October lows down around 3300 on the S&P. Now, this is just my take on the marketplace. A lot of people think that, hey, the support levels held. We're now rallying back up. We're going parabolic. It's taking off. Everybody get in. I don't see it that way. I think we're going to come back down, retest the October lows, probably take the October lows out. Once again, just my take. All right, so let's go over to the housing market. Now, in the housing market, I have a completely different take. I think the housing market is going to have the largest crash in history. The largest crash in history. Now, why do I say that? Well, in the subprime crisis, we dropped 34%, right? But the bubble's bigger now. We're in a bigger bubble. So the drop will have to be more. I think we're going to lose all that, and we're going to lose more. I think the crash is going to be 50%. Now, when I say crash, it's not like a stock market crash. Now, stock market, it can crash in a day, 2 days, 3 days, and it's all over, right? You're down at zero. Hopefully that doesn't happen, but it could happen. But in real estate, it takes longer. This is going to play out over the next year or two when I talk about the crash. Now, in the Great Depression, there was a crash during the Great Depression back in the 30s, and the housing market, it only dropped about 26%. Now, why was that? Why didn't it drop more on stock market? It went down 90% or something like that. Free fell. It dropped a lot. I forget what the market went down, but it dropped a lot. But the housing market stayed relatively high. Now, why was that? Well, because they didn't have loans like we have today, right? If you were buying a house, you'd be lucky to get a 50% loan. 50% loan to value. Well, today, the average person puts about 5% down. And this bubble has gotten so much bigger, so big. The bubble's huge right now, right? The largest bubble in history. So we're probably going to have the largest crash in history. But people back in the Great Depression era, they had 50% down. A lot of people paid cash back then. Houses weren't all that expensive like they are today. Today, the average is 5% down, but the FHA loans, let's talk about those. 3% down, right? If you got an FHA conforming loan, you can buy a house which is 3%. Okay, well, here's the thing. 10% of FHA loans are already in default. 1 out of every 10 loans are in default on the FHA program. Well, that's because the houses have already gone down more than 3%, right? We're down about 13%. 13% on the median price home across America is off the high. Now, that high happened back in June, and we're not even at a year yet. We dropped 13% quicker than a year. This is the fastest drop in history. Faster than 2008, we're coming down, right? But if you talk to a lot of people, they'll tell you, Mike, you're full of it. We're not going to crash. We're not coming down 50%. We're already down 13%. And now, well, even the Dallas Fed came out and said, we're going to drop another 20% from here. This is the Fed. They're going to be the ones that are crashing this market. They're telling you it's going to come down 20%. I think they don't want to scare you because because it's going to be another 40% on top of what we already dropped, that 13%. Okay, and that may be conservative, but if you talk to people like Barbara Cochran of Shark Tank, she'll tell you it's a great market. Get out there and buy. You can always refinance later once those rates come back down to zero. Well, rates right now about 7%. 7% with good credit, 8% with bad credit. Now, I was listening to a little clip on Dave Ramsey over the weekend. Now, Dave Ramsey, he's got this thing down. He's got it simplified. Houses are not going to come down. Do you know why? Well, it's simple. Economics, it's supply and demand, right? And if there's no supply of houses, it can't come down. Well, once again, Dave Ramsey back in 2007, 2008, he'd tell you, buy a house because they're going to always go up. He's a perma bull in the housing market, but I don't see it his way. Now, he says there's no shortage of houses out there. Well, I say there's no shortage. He says there is a shortage. He says that because the inventory is so low, and you hear this all the time, if the inventory is this low, we can't have prices drop. That's actually not true. But the inventory is not as low as they think. All right. Let me explain some things and why this is going to be a very large drop in the real estate market and why you might want to be careful when it gets to those low levels. You might not want to get in if you're expecting a V-shaped recovery. We're not going to get that V-shaped recovery. Now, back then in 2008, 2009, where it came down, it went right back up. And we bottomed out in 2012, and then we're actually at new highs now. It's a V-shaped sort of recovery, right? We made all of it back, and you could sell your house now if you wanted to. If you were in that little downward drift, you're back at new highs. We may not get back to new highs right away. Now, okay, let's talk about the housing market now. Okay, so these are rough numbers. These aren't exact. They're not even close to exact, but they're rough. They're rough numbers. All right, let's say there's 150 million homes in the United States. 150 million homes. All right, I'm telling you that about half of that is going to be up for grabs. Half, that's right. About 75 million homes, that's called. Okay. All right. So how do I get that number? Well, okay, let's talk about this. All right. So out of those 150 million homes, we got about 15 million of those houses that are vacant. Now, out of those 15 million vacant, 10 million of them, nobody's lived in them for the last year. This is what we call shadow inventory. Okay, shadow inventory that could come onto the market to buy. If they get in financial trouble, they'll be dumping these houses on the market. Nobody wants to hold a vacant house when they have financial trouble. They'll be selling that as fast as they can. That's 15 million. All right. Now the investor market, let's call that roughly 30 million. 30 million. Okay. 30 million homes, the investor market. Now, this includes things like all investors, from the corporations to the mom and pop to the Airbnb rentals out there. But these are not just investment properties. Now, these properties are highly levered. Okay, a lot of leverage goes into these investment properties, and not all this leverage is at a 30-year rate loan. 30-year rate loan, 7%, but some of this is levered on 5 years or adjustable rate loans, if you will, because they have to refinance every 3 to 5 years. That's what investors do. That's what the BlackRocks, the Blackstones, they do. They don't have 30-year money. They have 3 to 5 year money, and they refinance it. So this refinancing, when it was 3%, was all cool, but now we're at this higher rate, 7%, not so cool. A lot of these investors are going to be dumping the homes on the market. Why? Well, we just said the interest rates are going to be higher for them, right? They have higher cost of insurance, higher cost of repairs, higher property taxes. A lot of these investors, they're realizing that if these prices continue to go down, they're going to be losing their butt, and they're going to be losing it really quickly. Now, they can get 5% on just the treasury market, right? Just the treasury yield can be 5%. They don't need to worry about renting it out to a tenant that doesn't pay, the tenant that's got a problem every month with something breaking on the house. They can get 5% doing nothing. So why do they want to be in the real estate market? Well, if these prices go down, they're going to start to catch on. Hey, maybe I don't want to be in the real estate market anymore. And these will be coming onto the marketplace. So there's 30 million there, right? 15 million. So what is that? 45 million. All right. So let's take the people Now, people don't talk about this a lot, but people like me, people that are getting older, the baby boomers. Now, people 65 and over. Now, I'm not over 65. I'm on the younger end of the baby boomers. But most baby boomers are over 65. Now, 65 and over own 25 million homes. 25 million homes. Okay, so what does that bring us up to? Well, 30 million plus 15 million. All right, what is that? 45 million plus 25 million. Well, that's about 70 million homes, which is almost half of the whole housing market. Now, let's talk about these baby boomers, these 25 million homes. All right. Now, a lot of people, as they get older, they go into old folks' homes. Well, that's if they don't die off first. Now, if they die off, well, their heirs get the property. What do the heirs do? Well, I'll tell you, my heirs, as soon as I die, they'll be selling it the next day. It'll be on the market tomorrow if I kick the bucket today. That's just what heirs do. They don't want the house. They want the money, and that's what they're after. Okay, so there's 25 million of baby boomers that are over the age of 65. They're going into old folks' homes. All right. Now, a lot of them, they talk about how they want to age in place. They want to die in their home. And some of them will get their wish, but most of them will move into old folks' homes. Why? Because they can't afford the house anymore. They'll move down. They'll downsize into a little one-bedroom apartment. They don't need the space anymore. They're financially challenged. 10 million of those 25 million people are already broke. Every penny they have is sitting in the equity of their house. Now, they would love to sell the house to you millennials. Now, you millennials, you're going to be getting some opportunities here because the baby boomers, we want to sell you our houses, right? But we want to sell you the house up here. But you can't afford the price up here because you can't qualify for the loan. And you don't have that big of a down payment. So you want to buy the house down here. The millennials want to get what Billy Bob got, but they're not going to get it. No, this housing market is going to pick up steam. It's going to start to go lower once the forced selling comes in. Now, what is forced selling? Well, if someone dies, the house is forced onto the marketplace. A divorce, a couple living together. Oh, I made a lot of money on divorces. See, I'm a real estate broker. If I know the couple, here's what happens when a divorce, right? So the divorce happens. They go, oh, Mike, get us out of this house. We can't stand each other. So I got to sell the house for them. Okay, that's great. There's one sale. But I got to buy them each another house because they don't want to live together. They need their own place. So that's 3 sales and 1 divorce. Oh, real estate brokers, we love the divorces. We make a lot of money. What about the job transfer? You get transferred from California to New York, you're not keeping your house. You're selling that. There's so many reasons, right? But the real reason and the main reasons that's going to force this housing crash that's coming, and it's going to take the next year or 2 to play out, but it's the layoffs. You see, we got that recession coming, and every other day you get a company announcing more layoffs, more layoffs. This layoffs are going to be the forced selling. Look, people say there's no inventory. Well, here's an interesting statistic. Inventory is up 70% year over year. 70%. We've gone like this. Inventory is going up, and the forced selling's not here yet. It's not here, but it's coming. It's going to be here, and it's coming really quick. Now, look, there's so many reasons that this housing market is going to be heading lower. Now, you can listen to Dave Ramsey. You can listen to Barbara Cochran. You can go out and talk to your local realtor. They'll tell you it's a great time to buy. It's just not the way I see it. No, I don't see it that way. I see inventory is going to be piling onto the market. I see prices are going to be coming down really hard. Now, don't get me wrong. The federal government, they're going to try to keep these up. What are they going to do? They're going to print trillions and trillions and trillions of dollars. And that's what they did in the 2008 bubble. They started printing, well, 4 trillion just in 2009 with the sole purpose of expanding the bubble bigger. But the bubble's so big right now, they would have to print 10, 20, 30, 40 trillion more dollars just to keep the bubble at its size. The air's starting to come out of the bubble. Now, do I think they're going to try to do that? I hope they're not that stupid. It's like pushing on a string at this point. They should let the market come in. They should let it correct. They should let it become a free market, because that's what we need. We need more free markets in this country. We don't have capitalism. People think we have capitalism. We do not. Our country's ran by corporations, and corporations are out there buying houses. This is all wrong. I want free markets. Free markets. Capitalism. That's what I want. Not this socialism that they're teaching in school. Now, I know a lot of you are socialists out there. I get that because that's what they taught you is a good thing. Look, it doesn't work. You want capitalism, but you want free market capitalism. Our country does not have free market capitalism. Capitalism is getting blamed for a lot of the problems in our country, but it's not capitalism that's getting blamed. It's corporatism. That's what's happening right now in our country, being ran by the corporations. We have to take the country back. Now, this could get me on a whole nother rant. I'm out of time today. All right. So anyways, I'm Tall Mike. If you like this stuff, give me the thumbs up. Why not? It's Monday. Get out there, everybody. Have a great week. I'll talk to you again real soon. Hit that subscribe button. Bye-bye.